Hello, and welcome to Gemini Traders Market Update, recorded on March 6, 2025. I'm Tina, here to guide you through the market's biggest stories, from ongoing tariff tensions to shifting defense budgets, and of course, major moves in cryptocurrency. We've referenced data from Yahoo Finance and investing.com to keep things factual. Keep in mind, this is not financial advice. Let's dive in. The Dow Jones Industrial Average currently hovers around 42,980, down from about 43,600 a short while ago. Meanwhile, the Nasdaq sits near 20,570, also showing modest declines this week. Analysts point to ongoing tariff disputes between the U.S., Canada, Mexico, and China as a significant headwind for global trade. Historically, the 1930 Smoot-Hawley Tariff Act taught us a hard lesson. While tariffs alone didn't create the Great Depression, they deepened the global economic slump by igniting retaliation and depressing trade volumes. Today, central banks can act more swiftly than in the 1930s, but the principle remains. Protracted tariff battles can raise costs for businesses and dampen investor sentiment. We're also seeing a partial ceasefire in Ukraine's Donbas region, leading to questions about defense expenditures. European defense firms like BAE Systems have ticked up 2 to 3%, as several nations contemplate boosting their self-reliance if U.S. financial commitments dip. From a historical lens, the post-Cold War era in the 1990s shows that even when traditional military budgets shrink, investments often shift to cutting-edge technology. Think stealth, drones, and cyber warfare. Watch for statements from NATO or EU leaders. If the conflict remains stable, we may see a pivot toward more specialized defense solutions. A Goldman Sachs briefing this week underscored the risk of higher inflation if tariffs persist and geopolitical friction lingers. Meanwhile, economist Dr. Miriam Caldwell, speaking on CNBC, expressed cautious optimism that markets could rebound later this year, assuming trade talks improve and the Donbas ceasefire holds. In essence, we have two camps. Optimists expect a near-term dip, followed by a rally if negotiations thaw. Skeptics fear a drawn-out stalemate that keeps inflation up and consumer confidence down. Here's my personal perspective. Safe haven, defensive assets. Gold, at around 2050s Oz, can offer a buffer during tariff or geopolitical uncertainty. Short-duration treasuries, with yields near 3.8%, provide stability if inflation accelerates. Innovative defense equities. Lockheed Martin, LMT, invests in emerging aerospace tech. Palantir, PLTR, focuses on data analytics, key for modern intelligence work. Crypto exposure. Bitcoin, after dipping to 80K last week, now hovers around 92K, a sharp rebound that highlights both opportunity and volatility. Remember, diversification is crucial for navigating potential downturns. Speaking of digital assets, Bitcoin's bounce from 80K to 92K signals rapid sentiment shifts, fueled by speculation over a possible U.S. strategic crypto reserve. However, heavy regulation talk or an SEC clampdown could change momentum in a heartbeat. If you're considering crypto, keep a keen eye on major legislative moves, stablecoin oversight, and corporate treasury decisions. All can drastically sway the market. To wrap up, tariffs. Monitor official negotiations for any breakthrough or escalation. They directly influence market tone. Defense. Ceasefires can reshape budgets rather than slash them. Look for AI and cyber-based investments if tensions remain moderate. Crypto. Bitcoin's quick moves reflect both hype and underlying adoption trends. Stay vigilant for regulatory updates. From Smoot-Hawley to modern tariff spats, history shows policy decisions can reshape entire economic landscapes. Staying informed and adaptable is essential. I'm Tina, and this has been your Gemini Traders Market Update for March 6, 2025, though, stay inquisitive, stay diversified, and we'll see you again soon for more in-depth market coverage.
Yeah, it's subscribe now, don't be late. Gemini Trader dropping.